The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender at NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and Chief Millennial Loan Consultant David Wickert. As always, if you have a question, you can call us or you can text it in on the Accunet Mortgage talk and text line. That number is 414-799-1620. So I'm kind of curious to hear where things are with this Equifax data breach. I know, Brian, you jumped on this right away.
Yep. Well, and here's what I keep finding. David, you want to say something?
I was just going to say, our website guys have told us just the sheer thousands of people who have gone to that blog post. So good job by you. Very helpful.
Thank you, David.
People are finding it.
Yeah. Well, we've had some help spreading the news, but I was playing golf yesterday because it was a beautiful afternoon with two friends. One had read our blog post and had gone through the process of freezing his credit report, his wife's credit report, and his college-age son's credit reports. Because remember, if you really want to freeze your credit report, you have to do it at each of the three credit bureaus, not just Equifax, but also TransUnion and Experian. And he reported, yes, Brian, I did need a strong cup of coffee because it took me roughly an hour to accomplish the mission for each person. Okay?
That's actually fast.
The other guy, though, I mean, it's an investment of time, but how can you not do it? That's the conclusion I came to. So the other guy, though, says, yeah, you know what? I went out on the Equifax site, and my wife was not part of the 143 million Americans who, for now, were hacked. That's right. But he was. And then he said, so I guess I should probably do something about it. Well, it didn't take us long to jump down his neck. Say, yeah, dude, come on. So this morning, by the way, I mailed him a link to our blog post because we got the recipe. If you decide that freezing your credit is the right thing to do, that's what I concluded, then I got the whole recipe on that blog post. So the thing, Steve, that I'm amazed at is how a lot of people are aware of what happened, that their Social Security number, their birth date, and their address has been stolen, but a ton of people still have done nothing.
What was your example about if the key to your front door was taken?
Yeah. If somebody came to you and said, you know what, the criminals have stolen the key to your front door, copied it, and sold it to, 100 crooks, in your neighborhood, in your town, how long would it take you to go get your locks changed?
I'd go to Menards right away.
Go to Menards right away.
Sure.
And yet people are slow to act on this. Why? Because they don't know what to do, and it's painful. And again, to do a good job, you can't just do it at one. Now, the other thing that's true is the guy who did nothing. Well, the first guy who did something was 67. The guy who was actually the best golfer of the three of us is going to turn 70 next year. And he's like, I haven't done anything yet. My theory is that the crooks are going to target older individuals because they're kind of just not as either paranoid or tech savvy. I remember I took care of.
Don't care what their credit score is if they're not getting anything.
Maybe they don't care, but it's the mess that's made that is the big problem. And remember, they do have your birth date. Okay, so they know how old you are, which is why I think they could easily target other people. Okay, the other quick development is that the CEO of Equifax did step down.
That's the verb? Step down?
Well,
okay.
Got the boot. I don't know.
You're having a better week than him,
Yeah, right. And then the new CEO, so this is important. So, right now what you can do at Equifax is you can go there and sign up for their credit monitoring service, which includes the ability to very easily lock and unlock your credit for free for 1 year. And I put in my blog, I wonder what I'm going to have to do after, the year of my free service. Well, they answered that question this week. Equifax has said that they are now going to build a free and free for life ability to lock and unlock your credit report at Equifax. They're in the process of building that. It won't be ready. Well, they promise it'll be ready by January 31st, 2018.
Okay.
Because remember, whenever a software guy tells you a date,
Double
you
it.
always have to ask the year. Well, it'll be ready in February. You got to remember to say what year.
When? Yeah.
Okay. So, so it's, and they also extend the amount of time where you could sign up for their free 1-year credit monitoring thing. So take advantage of that. But then we're all going to have to go back in January to Equifax and enroll in whatever their free services
Well,
are.
and just to tie this into mortgage lending, you have to have your credit open and available for Accunet to help you get started on a rock-solid pre-approval or to refinance. So having the ability to toggle back and forth could be really helpful.
Oh, yeah.
The TransUnion website is slick, just on and off, but you just got to be aware that, like, we got to open up the door quickly and then shut it again after we get your credit report.
I'd like you to kind of leave it open for maybe 2 or 3 weeks, frankly. We're finding out. I'll explain that to you why after we're off the air. But the bottom line is, again, if you haven't done anything, if you haven't found out if you are part of the hacked masses, or if you have and you haven't done anything about it, and you want to know what I did, just go to Accunet.com, and right in the middle, kind of towards the bottom, is the blog post that talks about how I went about doing what I did. To take care of that. All right, when we come back, we're going to talk about the Republican income tax overhaul proposal. And there's a lot of talk, that it's going to be harmful to home ownership. We're going to peel back that onion right after this break.
Right here on the Accunet Mortgage and Realty Show.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
2 years and 2 sellouts. You know what that means? You better not hesitate to get your tickets to this year's WTMJ Holiday Radio Show. It'll benefit Kids to Kids Christmas. It's happening November 27th at Turner Hall in Milwaukee. You can hear the story of how WTMJ saves Christmas and see all your favorite voices on stage. And you are part of the live studio audience. Tickets go on sale tomorrow at noon. You can head over to papsttheater.org. You're listening to the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. And I know you guys mentioned this last weekend, but it bears worth repeating. With this data breach at Equifax, it's paramount that people file their tax returns as early as they possibly can, because the crooks now have all your information and can file a false return ahead of you.
Yep, and you think about it. What do they have? Your Social Security number.
They got everything.
Your address. So if they then phony up an ID, I got to talk
any 19-year-old would say is not that hard.
Not that hard. I don't know how hard it is to then walk into a bank or online to open up an online bank account pretending to be David Wickert.
Yeah.
And then you go ahead as the crook and you file a tax return pretending to be David Wickert that results in a nice juicy refund, and you have the refund sent to the fake bank account.
Yeah.
And so that is another type of fraud that's been identified.
Speaking of tax returns.
Yeah, speaking of tax returns, the Republicans are out with their proposal to overhaul the entire federal income tax system.
First time since 1984?
I don't know.
Okay.
That could be good. And the proposal keeps the mortgage interest deduction, but not really, which I'll explain in a minute. And it keeps the deduction for charitable contributions. The proposal eliminates the deductions for property taxes and state and local income taxes in exchange for simplifying the number of brackets down to just 3 and lowering some of the top income tax rates. So that's the basics of it. Of course, the National Association of Realtors, of which I am a card-carrying member, came out with this statement. David, would you like to pretend to be the NAR?
The result would all but nullify the incentive to purchase a home for most, amounting to a de facto tax increase on homeowners, putting home values across the country at risk, and ensuring that only the top 5% of Americans have the opportunity to benefit from the mortgage interest deduction, the National Association of Realtors said.
David and I, our response, even though I'm a member of that organization, is hogwash.
I rolled my eyes.
Yeah, we don't agree with that. So let's just review for people. First of all, I think every American should know how many dollars of federal income tax they paid last year.
Yeah.
And I would bet you a lot of money that if we did a survey of any random 100 Americans, that like two of them would know.
Yeah.
Maybe two, or definitely less than 5% of people know the dollar amount of federal income tax they paid. They know how much they maybe got for a refund. Yeah. They maybe know how much they had to mail in, but they really don't pay attention to the actual dollar amount of tax that they paid, which is calculated very simply based on these three numbers. What's your adjusted gross income? That's the bottom, page 1 of your federal tax return. Then, what amount does Uncle Sam allow you to reduce that income by before calculating how much tax you owe? That is what we call exemptions and deductions. Okay, there's two kinds of deductions. You can take a standard deduction where you don't have to prove a thing, or you can itemize your deductions and say, well, I paid this much in mortgage interest, I paid this much in property taxes, I paid this much in state income taxes, and I made this much in charitable contributions, and you total all that up, and you can subtract that from your income. And then the third thing that really counts is what percentage of your income does Uncle Sam want to take away from you? So they haven't told us yet. They've told us the percentages, but they haven't told us where the income brackets are going to be.
Oh.
So we really don't know that part of the situation. All right, back to the main question, for us anyway, is whether or not the proposed tax plan will hurt home buying. My first question for David is, have you ever had anyone ask you, first-time home buyer, repeat home buyer, have they ever asked this question, David? What will my monthly payment be after taking into account the income tax benefits of home ownership?
Not one time. -2% times.
-2%.
That is literally not a question anybody asks.
Correct. We are here as frontline mortgage professionals to try to remind the National Association of Realtors, any realtor who listens to this show, don't worry, folks, and the realtors know this who are practicing every day, home buying behavior is not motivated by math, okay?
No.
Home buying behavior is motivated by things like, what do people say to you, David? What do first-time home buyers
I'm tired of renting. I'm tired of paying my landlord's mortgage for him.
Correct. It's based on that kind of just gut level, I am tired of paying rent. And then the other thing is a life event, like, hey, we're getting married, or we're having a baby, and we want to have a place
or a second
of our
baby,
own,
and we need that next room.
Exactly. Yeah. That's what motivates home ownership. Yet there is a big correlation. And we're going to tell you this story about exactly how home ownership is a major factor in wealth accumulation when we come back from this break.
Right here on the Accunet Mortgage and Realty Show.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Basketball world is rocked by a scandal that may take down several of the biggest coaching names in the sport. Is there anything the NCAA can do to right the ship once and for all? Justin Garcia leads that discussion today during Wisconsin Sports Weekend at 12:35. Right now we're in the midst of the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. You can reach us on the Accunet Mortgage talk and text line at 414-799-1620.
Hey, so we've been talking about the tax plan, and is that going to have an impact on home ownership? David and I are saying nope, it's not. And we were at a digital mortgage conference for a couple days this week in California. So we're looking at all kinds of cool stuff that we could add to our website or improve our processes. And we were at one booth, and the guy said, "Hey, I got this really cool rent versus buy calculator that you could put on your website." And David and I instantly jumped down his throat and said, "Don't care. Don't care." The only two things that people care about for calculators are what's my mortgage payment going to be and how much home can I afford.
That might be relevant to the coasts, where renting might just be so gaudy.
Well, okay, all right, maybe it is. But here is what we then said to the guy. The reason, the financial benefit of home ownership is not tax deductibility. Yeah. It is you are entering into a forced savings plan. And so I did the math on that this morning. And the reason I say you're entering into a forced savings plan is now you have to make the mortgage payment. And if you happen, Steve, to get a $200,000 30-year fixed rate loan at 3.99% today, the very first payment reduces your principal balance by $289.
Boom.
And that number increases every year every month actually, because each month the blend of principal versus interest changes in favor of increasing on the principal. That's just the way the math works. So by the end of 5 years, each payment is now paying down $352 a month. Wow. Interesting. For a savings plan. By just making the regular payments on that $200,000 loan, after 7 years, you will have paid down your mortgage balance by $28,000. Cool.
Sweet. For
a savings plan. All right, so now if you bought that house for $211,000, that means you made a down payment of $11,000, or about 5% in my example, and the house went up in value by 2% each year for 7 years. And then you sold the house, and then you had to pay 6% real estate commission and another 1% of the purchase price towards all your other costs of selling, like title insurance and all that stuff. 7 years later, you would push back from the table, the closing table, and you would have $53,000 in your pocket.
Good Lord.
So you would have put down 11,
yeah,
and you'd walk away with 53. That's a $42,000 gain.
Yeah.
Okay. Now, do homes always go up? Steve, have you ever owned a home where it went down in value?
Oh, yeah.
Oh, yeah. Okay, but over time, it's not 100% guaranteed, but over time,
the majority of them make money.
Exactly. You could say 2 or 3%, typical gain. Oh, by the way, if I do the same math and your home appreciation is 3% a year, then you walk away with $58,000. Still not bad. Yeah. The point is that home ownership is a way to accumulate wealth. And here's one other tidbit that I found today on the Census Bureau. 79% of homeowners in America, according to the U.S. Census, have a household net worth of $50,000 or more. And the median household net worth of homeowners in America is $199,500. All right? Only 16% of households who are renting, only 16% have a net worth of over $50,000, and the median net worth of renters, are you ready? I'm not making this up, is $2,208. So there is something about home ownership and accumulating wealth, and I think the secret is it's a forced savings plan on an asset that over most period of times goes up in value. All right, so there's your answer to the benefit of home ownership. When we come back after the news, we'll do a rate roundup and let you know what's going to be moving rates next week when we come back.
Right now, though, we welcome in from the WTMJ Breaking News Center, Belinda Babinick.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert. And as always, if you have a question, you can call it or text it in on the Accunet Mortgage Talk and Text line. That number is 414-799-1620, heading into the rate roundup portion of the show here.
You bet. So at the close of business on Friday, Accunet could offer a 30-year fixed-rate mortgage at 3.99% with, wait for it, 0 closing costs.
Wow.
My favorite.
So does that have any points, David?
There are no points.
What about administration fees or
no paper
lock-in fees?
Okay.
No, appraisal?
We're paying for that. We're covering that as part of your lender credit.
Okay, that's
so
good.
Pretty slick. And if you're someone who's maybe looking to retire in the next 10 to 15 years and you say, honey, you know what's going to help me sleep well when I'm 65? A paid-for house. We can get you that 15-year fixed rate at 3.25%. APR is 3.3. That's with regular closing costs.
Okay.
$1,180.
All right. What about a 20-year fix? I looked that one up. I know the answer.
Okay, you do? Okay,
3.875 with no closing costs. And that's on a $200,000 loan with 25% equity and all the other right stuff. Did you say that already?
Yes.
Okay, good job.
Or I think I did.
Okay. So, and still far and away the most popular loan that we do write is the 30-year fixed, followed by the 15-year fixed. I had a conversation with a guy. Before I get with that, we'll do that in a little bit. But first of all, what's coming up on the economic calendar and what has happened relative to interest rates?
So this week was a back and forth between the North Koreans continuing to do what they do, But then when the president rolled out the tax reform plan, that kind of offset the scary news of North Korea with good-ish news about, hey, that might spur the economy forward. Never forget, folks, what is good news for the economy is probably bad news for interest rates.
Most generally.
And vice versa. What's kind of poor news for the economy is good for interest rates. And then coming up this week is the jobs report. That comes out Friday morning at 7:30?
7:30 local time. Hampton Pearson stands there on the steps of the Labor Department and does his job for the month.
It's pretty
He's
good.
always looking really tan. I want that job.
He's got a whole month.
Yeah, exactly. But the other thing that's true is Janet Yellen and the Federal Reserve have now come out and said, hey, we are going to raise rates. We really want to raise rates one more time this year. So now the chances of another, which I think would be the fourth Federal Reserve hike, is up to
76%. And you have it's oscillating between high 70s, low 80s, that they're going to do that at their December 13th meeting. So what does that mean?
That means that your rate on your home equity line of credit will immediately increase in January. Right now, the prime rate is at 4.25%, and that's what most people pay on their home equity line of credit. Some pay more because either their credit's not as good or they're borrowing more of the equity of their house. And so that's going to go to 4.5%. So, our question is, if you got a balance on your home equity line of credit, that's at 4.25, heading towards 4.5. Depending on what the rate is on your existing first mortgage, maybe now would be a really opportune time. Well, 30-year fixed rates, or maybe a 15-year fixed rate, or 20, we could put those two together.
Well, and the conventional wisdom, being on the phone every day, is for folks who think, oh, honey, I want to redo the kitchen.
Oh, yeah.
Let's go out and get a home equity line of credit. My 2 cents on that is your kitchen, if you carry a balance on that HELOC, is going to continue to be expensive and more expensive as time goes by. So let's tap into the equity in your home on a fixed rate on the first mortgage, if only because, amortizing the cost of a new kitchen makes sense because you're adding to the value of the house, and let's do it
in the safest possible manner.
Exactly.
Well, and I just saw a billboard, an electronic digital billboard for one of the lenders out there, and they're all doing this, which is God bless them. Like 1.99 on a home equity line of credit. Well, that's for a limited time. I didn't read what this one was. Is it 3 months? Is it 6 months? Is it a year? Before it then reverts to the regular formula. And so just know that, home equity lines of credit are adjustable rate mortgages, and most people don't want to have those. So we've done a lot of that. You just did that for another client, or I know what it was. You called a client whose loan we did in April.
Yeah.
In order to, on a 15-year fixed at 3.625, in order to lower their rate by about $1,000, lower the rate, which would result in a payment savings of $1,000 a year.
Yeah.
And you were able to do that for them at a cost of?
I think I did it at zero closing
That's right.
costs.
No loan costs on that loan.
Pretty slick.
But then in the course of talking to him, he said, hey, guess what? We want to put some new windows in that are going to cost us about $12,000.
I was looking at that. His payment is changing by $1.
Yeah.
He's putting $10,000 in his pocket, and his payment is changing by $1.
There you go.
That's a win.
That's a win. So, mortgage is a big financial element in your balance sheet, and you should use it like a financial planning tool. And we're going to talk a little bit more about that. I had a customer who was debating in their mind between a 30-year and a 20-year. So should you pay the loan off faster or slower? We're going to talk about that when we come back.
Right here on the Accunet Mortgage Realty Show, and you can join us on the Accunet Mortgage Talk and Text line at 414-799-1620.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Featuring nearly 300 films from 40 different countries, the 9th Annual Milwaukee Film Festival is taking place now through October 12th. Artistic and Executive Director Jonathan Jackson takes Eric Bilstad behind the scenes, coming up at 11 a.m. during our WTMJ Conversations. Right now, though, it's Brian Wickert and David Wickert, the Accunet Mortgage and Realty Hour on WTMJ.
So I got a email, I think it was, it was 2 weeks ago. I've been meaning to talk about this, from a fellow buying a house. And the reason I got the email or the phone call, I ended up talking to him on the phone, was because we have a document that says you've decided to escrow for your insurance and property taxes. That's what was on this particular guy's letter or disclosure up front, and it said, if this isn't correct, call Brian Wickert, which, by the way, we should change that so that everybody's not calling me with that little doodiddle. But anyway, he called me, and I called him back and got that straightened out because he didn't want to escrow for his home insurance. Fine and dandy. But then I said, I noticed, let's call him Fred, that you just recently switched from a 30-year fixed rate at 3.99% with no closing costs, and you decided to go with the 20-year fixed rate at 3.875, also with no loan costs, okay, and reduce your principal balance accordingly so that the payments would line up, be the same. I said, just tell me about that. And he said, well, when your loan consultant sent me the options, he gave me both options, and first we thought, we'll go with the 30-year, and then we decided we really want to get that mortgage paid off. And I said, well, that's cool, no problem, but you're putting down, like in his case, it was like an extra $26,000. He was going to put an extra down payment in order to get that 20-year fixed rate to be the same as what his 30-year would have been. And so I tried to point out with him, apparently with too much mathematics, that, you can turn your 30-year fixed rate into a 20-year. So if you want to do that, you can. But then if life throws you a curveball, in the future, you get in a car wreck and now you got to live on disability income for 6 months while you get better, or your wife loses her job, or you lose your job, you're not obligated to that higher 20-year payment.
I say to folks, you can always pay it faster, but you can't pay it slower.
Yeah, if you pay your loan slower,
it's not going to be your house anymore.
That's right. Take it away. And so he ended up sticking with the 20-year fixed. And I don't know if I gave him too many numbers or what, but I was just trying to say, you can have your cake and eat it too here.
I just did the math. It's a $245 difference in your payment on a $200,000 loan.
Correct. And so we were talking earlier in the show that one of the big benefits of home ownership is that it is a forced savings plan. And so what this gentleman chose to do was to kind of force himself to pay that loan off in 20 years, which is fine. And people do that, 15 years, the ultimate example of that. But the other alternative is to stretch it out. And then what, David, you used to be a Series 7 investment license holder. The name of the game there, or the real question, and I think I talked to this fellow about this, was you could take that $245 difference between the two payments and invest it in something else.
Yeah.
And all you have to do is beat the 3.875 rate, or the 3.99 rate, which over time, most financial advisors, I think, today are saying that they can fairly safely deliver to a person 6 or 7 or 8% return. And that's what you call being a bank. That's what banks do.
Yeah.
Right? But anyway, so to prove our earlier point that mortgages and home ownership is all about emotion, he said, no thanks, I'll stick with the 20-year fix.
Well, and one of the things that I always emphasize with our loan consultants is, or even with folks on the phone, it's like, if you need to put 30% down on your purchase because you're just not going to be able to sleep at night, unless you do that, totally fine. But we're at least going to point out what the opportunity cost, the cost-benefit analysis is of totally cool. If you want to do a 20-year, here's what your savings will be. Is that more worth it than the other things you could do with that money? We do that every day.
Because a mortgage is a big part of your financial planning overall, too. And we work with a lot of financial planners that realize that. All right, when we come back from this last break in the show, we're going to tell you about what we're doing with Milwaukee Habitat for Humanity when we come back.
Here on the Accunet Mortgage and Realty Show. And if you have a question, you can text it or call it in on the Accunet Mortgage Talk and Text line. That number is 414-799-1620.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert, if you have a question, you can call it or text it into us on the Accunet Mortgage Talk and Text line. That number is 414-799-1620.
So earlier this year, we started the construction of our first ever full house sponsorship with Milwaukee Habitat for Humanity. So all the Accunet employees got to go out there. Some of our vendors showed up and swing a hammer and actually got a lot done during that build week.
My arm was really sore the day after swinging that hammer.
Mine is still sore. And I want to say that's the reason I didn't score so well yesterday in my golf game.
Sure.
I actually have a carpenter's elbow. That's a real thing.
Okay.
Anyway, so we like doing that so much. That house isn't complete yet, but the annual fundraising dinner is coming up for Milwaukee Habitat. That's on Thursday, October 12th at 5:30 in the 5th Ward at the Lindsay Building. But we decided that we would issue a challenge matching grant.
Oh, because you're emceeing.
I am going to be the MC of the dinner that night. So, but what we decided to do is we wanted to build another house, and so we put out a challenge that I'm now going to expand to anybody listening to this radio show. The original challenge was to any mortgage industry or real estate professional in the Milwaukee area, and the deal was we would match dollar for dollar anything that they would donate. Either if they decided to come to the event, which has got a stiff price tag, it's $125 a seat, table's $1,000. But if they come to the event and they buy something on the silent auction or do a voice auction thing or just give money, we would match dollar for dollar anything our peers gave to Milwaukee Habitat up to $75,000, and that's the cost of a house build in Milwaukee Habitat. So I am now extending that to any WTMJ listener. I know there are a lot of people asking for your money with the hurricanes and all that kind of stuff in Puerto Rico and everything that's happened. But if you want to make an investment in, local,
the housing health of Milwaukee.
That's exactly what I was trying to say. The housing health of Milwaukee. Milwaukee Habitat for Humanity is the place to do it, in our opinion, because remember, it's not a giveaway program. The homeowners who end up owning a Habitat home have to, donate 300 hours of sweat equity working on someone else's house if they're a single person. If they're a couple, then they have to donate 500 hours of sweat equity. They have to complete rigorous homeownership education and credit counseling. They have to have a job because they also walk away with about a $95,000 mortgage that they have to repay to Milwaukee Habitat for Humanity, albeit at an even lower than Accunet able to provide rate of 0%.
Yeah.
But it's not like they're getting the house for free. They are getting a mortgage for typically $95,000, and they got to pay that back.
Well, and every payment that they make goes to helping fund another home, the next home.
Correct.
I think one of the coolest things that they've done is actually, in addition to building homes, is rehabbing homes.
Correct. They have gone. What they're really trying to do is impact an entire neighborhood, the Washington Park neighborhood, and that's just east of Wauwatosa. And so they're trying to do whole blocks of rehabs and home builds, and they're really stabilizing the entire neighborhood. Violent crime is down like 40% in the areas where they've done work. So it's really a market-changing, life-changing. We talk about the emotional benefits of home ownership. There are also statistically proven for folks that become Habitat Humanity homeowners, kids do better in school. It's a huge impact on the community. So if you want to donate or if you would like to come to the event, you can just go to MilwaukeeHabitat.org. That's MilwaukeeHabitat.org. The Framing the Future Gala is right there on their homepage, and there's also a donate online. And all you got to do if you decide to donate online is just type Accunet in the comments section, and we'll match your donation. All right, so coming up, we've got the jobs report this week coming up. That could be a mortgage interest rate mover.
And whatever North Korea might do this week, too.
Well, that's true, too. Then, by the way, next week's show, we do have another show next week before we get preempted by a noon Packer game. So next week, I'll have the numbers for September for housing sales in southeastern Wisconsin, and that's going to be really interesting. Because remember, I was saying,
you were real nervous.
I was kind of nervous about the pending sales number that I saw in August. And that's a factor in terms of the amount of inventory that's out there. We're still getting a lot of applications for not only rock-solid pre-approvals. By the way, I got this nice email from a real estate agent. Let's see if I can find that quick. That said, well, that's not coming up. Oh, wait, here it says. It said he was writing to one of his borrowers and copied the loan consultant. He said the Accunet Rock Solid Pre-Approval is quickly becoming the gold standard in southeast Wisconsin. Sellers and realtors alike breathe a sigh of relief when they see this document because they know that the buyers can make the deal happen. That was an email from a real estate agent to one of their buyers, encouraging them to follow through and get the Rock Solid Pre-Approval, which anybody listening to the show, if you know somebody's thinking about buying, we really think it's the right tool for the job, and you can get started with that. Guess where? Accunet.com, ACCUNET.com, and you can also just click on the blue button for refinancing to find out how much you can save while rates remain nice and low. That's all we've got for today's show, Steve. We'll see you back here at the same time, the same place, next week.
And straight ahead here, Belinda Babinek joins us from the WTMJ Breaking News Center.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.